Hi, welcome to Round the Table with Gratz Park Private Wealth. I'm Sherry Hawley, President and Senior Wealth Advisor. Here to recap the month of March, and also now we've got a full quarter in the books for 2026. And as we entered this year, if you recall, I mentioned three themes we would be focused on. One, geopolitical events, which happen every year. We don't know what they're going to be, but typically happen every year. Number two, the appointment of a new Fed chair for the Federal Reserve. And number three, the midterm election, which will happen this November. All of those things can create uncertainty. And so we were anticipating more volatility this year while still having an underlying stock market that would produce positive numbers. So let's take a look at where we are. Well, the Iran conflict, which began on February 24th, is still not concluded. As I film this, we did have our 2-week truce or a 2-week ceasefire period, and so we're having a huge rally on the markets today. But overall, the Iran conflict has created volatility and a reduction in the market values. We experienced our first correction for the year. A correction is a 10% drop from the highs, and we felt that in about the third week of March, when we dropped 10% from the January 27th all-time highs for the S&P and the Dow. That being said, there's greater impact too on the economy because we are seeing higher fuel prices. Oil reached well over $100 per barrel. We're impacted as consumers. And just be mindful, it impacts households in varying degrees. Many people who are in very fixed budgets have a huger impact with these higher gas prices. And we saw gas prices creep over $4 a gallon. It also impacts our food costs, just transporting those foods, fertilizer, helium, all of these things that with the Strait of Hormuz being closed has had a real impact on these price of goods. And that's where we saw it in some of the economic indicators. The prices paid indicator was way up through this month of March. So we'll have to see as the dust settles on some of these numbers throughout the year, how it has an impact on the future economic outlook. That being said, right now, as I mentioned, the ceasefire last night has the market in a huge rally mode. So we're probably now tipping to a positive market, back to a positive market for the year, but ever so slightly. And we really don't know if this is the end of the conflict. The longer this goes on, the greater the impact on our economy, which will eventually move into those stock prices even more. So overall, just keep in mind that we're not through this and there will be greater impact as we get economic data in the future. Right now, the underlying economic environment is still resilient. Secondly, we will begin earnings. First quarter earnings will be reported this month of April. And, we do anticipate some volatility. We do have a high bar. We're expecting about 13% growth in first quarter earnings year over year for the S&P 500. So may get some volatility there as companies report moving through April. May, we begin with the new Fed chair. I do think that is kind of risk off now because of the appointment of Kevin Warsh. It's a known commodity now, as well as someone who is very well respected in the community and who also served as a Fed governor in the past. So we do think that the Federal Reserve will stay independent in their thinking as we move forward with this economic picture. And that being said, we were anticipating 1 to 2 cuts this year. I still think we may get 1 cut later in the year because we have seen unemployment creep up, even though other indicators are showing a solid economic growth of maybe 2 to 2.4%. Unemployment is still a bit high. Inflation is still a little high. So that, those are the two things that the Fed is going to have to weigh. And if one becomes greater concern than the other. So we are still anticipating 1 cut, but it's probably now going to be moved from June to September and perhaps even December, depending on how long this Iran conflict continues. Finally, as we approach midterm elections, as I've always said, the uncertainty created by elections creates market volatility. But once the election is over, the market will go back to whatever the fundamentals are at that time. So just we'll pay close attention. I think it's been great that investors have been resilient themselves and not jumping out of the market, because this is typically a time when you do not want to make a lot of changes in the portfolio until you get more economic information for the long term. So stay tuned, and we'll be back with you for our April roundup in a short 30 days. Thanks for joining me. Until then,